An IPO is a process in which a company offers shares to the public for the first time. This process is called an initial public offering. The company offers shares of its stock for sale to the general public, typically in order to raise money for the business, repay debts, or have a liquidity event. An IPO is one way for investors to share in the success of an enterprise and can be an important source of capital. Initial public offerings have long been a popular term on Wall Street and among investors. By selling shares of the Dutch East India Company to the general public, the Dutch are credited with launching the contemporary IPO. Since then, firms have utilized IPOs as a means of raising funds from the general public by issuing shares of stock to the general public. IPOs have experienced uptrends and downtrends in issuance over the years. Due to innovation and several other economic reasons, individual industries also undergo uptrends and downtrends in issuance. At the height of the dot-com boom, companies scrambled to list themselves on the stock market as technology IPOs surged. A business is regarded as private before going public. The company has developed as a pre-IPO private company with a very limited number of owners, comprising early investors like the founders, family, and friends, as well as qualified investors like venture capitalists or angel investors. A company taking part in an IPO is taking a big step because it opens up the possibility of significant capital raising. This increases the company's capacity for development and growth. When seeking borrowed money, the greater transparency and legitimacy of the share listing may also help company get better terms. There are essentially two steps in the IPO process. The pre-marketing stage of the offering is the first, and the actual initial public offering is the second. A company that wants to go public will either request private bids from underwriters or make a public announcement to pique interest. The first step in an IPO is to hire underwriters. The underwriters are responsible for determining the price of the stock and managing the sale of shares. They also make sure that information about the company's financial performance is accurate and consistent with what investors want to know. The next step in an IPO process is to file documents with regulatory agencies such as Securities Exchange Commission. These documents include a prospectus which contains detailed information about the company, how much money it has made in the past year, and how much money it expects to make in coming years. An IPO's main goal is to help businesses raise finance. It may also have additional benefits in addition to drawbacks. Thank you for watching my video.